As Omicron fears lift, the S&P is just 2 out of 4,704 points away from a new all-time closing high. Do we get there? I personally think we do. We've certainly been bearish in some areas of the market that have continued to go up. The Megacap Techs, they're great companies and great products, but they're quite expensive. However, they have kept going up. And they have been the primary drivers of this market the last several years. However, even if those stocks take a pause, and maybe they will, I think we can still get to new all-time highs and continue to push to new all-time highs. Why do I see that being the case? Well, while the Megacap Techs are already back at new all-time highs, there are a lot of areas of the market that have very bullish theses, and are some of our favorite sectors that are well off their 52-week highs. And those stocks alone should give us the few points we need to boost up there. What are we talking about? What do we mean? What do we talk a whole lot about on this channel? Energy. Energy stocks, WTI crude. Energy stocks are pretty well off their 52-week highs. Some of them hit them in that August, September, October rally. Some of them hit them in June. Regardless of which one you pick, I believe most energy stocks, the ones I've done my homework on at least, I believe will get to new 52-week highs. ExxonMobil did recently hit a new 52-week high. It was relatively close to its previous 52-week high. Its previous 52-week high, it reached when the price per barrel was around 60. And people were feeling very good about the price per barrel at 60. We got down into the 65 range when Omicron hit. That has been lifted. We're now back into the 70s, which is way higher than when it was in the 60s. And then when it previously, was in its 70s period, and we're way off that previous 70s period. In addition, if you look at more of a 5-year kind of chart, we're well below previous levels. There's a number of reasons for that. There's been a whole lot of, you got to just sell energy, ESG concerns. And we believe Exxon has addressed those, and other energy companies have and are continuing to address those. We like to remain in the ones that are addressing them because we view this as a long-term position that can offer us good gains in the short and the long run, and we want to be shareholders for that journey. So we like ExxonMobil for that reason. So the stocks have been fundamentally priced down given those ESG concerns, and they've been priced down despite a higher price per barrel of oil. They are making a whole lot of money. Exxon CEO Darren Woods recently said they expect to double cash flow and earnings in a matter of years. That is quite fantastic. They've already got a good dividend. They are prioritizing paying cash to shareholders because they have so much. There's only so much they can feasibly spend on R&D when you are a company making that kind of money feasibly and responsibly. So that's a company we own, we like, and we think can get to new 52-week highs for a multitude of fundamental reasons. Another one that's worthy of note and is, representative of similar comparable energy companies is something like Schlumberger. Schlumberger, like Exxon, does trade on the price per barrel of oil. It's not necessarily directly affected by the price per barrel of oil, but as the price per barrel of oil rises, due to the supply and demand deficit, a company like Schlumberger, which enables companies to produce, and we know they are picking up production. Demand is rising, and it probably will get higher than it was pre-pandemic because more people are driving their own cars. The economy is picking up. EVs use a whole lot of plastic. We're making new roads, infrastructure bill, etc. Oil demand seems to have the groundwork to continue to rise, oil consumption. Schlumberger hit its 52-week high in June. It was one of those June, not August, September, October stocks. And it got close, but didn't get there. We expect as sentiment and shift turns again for the first time in about a decade back to energy stocks, that Schlumberger will benefit and will likely hit new 52-week highs. It's possible we see a more meaningful recovery beyond that because, like Exxon, Schlumberger is prioritizing ESG concerns. And they expect to be a carbon neutral company by 2050, I believe. Feel free to check and correct, but I believe. So we like these stocks. We like the way they're positioned. We like the market because there are stocks that are well off their 52-week highs that can help carry us there. In addition, banks. So another macro thing we need to talk about and consider is interest rates. And we do expect on this channel for interest rates to rise and continue to rise as inflation continues to pick up. We're going to get some data on that later this week, and that will maybe we'll adjust. We'll see. But we expect inflation has occurred and will continue to occur in some capacity. That will force the needed move in bond yields, which has been suppressed since the trade war. So that has been a long period of time. COVID hit after that, and we're really at depressed interest rates, and that should reverse. So as that reverses, that does help financials. They make a spread on the credit they sell to customers, and they will likely make more money. They're trading at very cheap valuations, similar to energy stocks, and they are actually a bigger part of the market than energy. So those two areas of the market combined can certainly give us those 2 points and possibly more points. Now, conversely, some areas to watch out for as interest rates rise, these Megacap Tech stocks. We love our Apple products. They are great products, but iPhone demand was slowing down. Sales were slowing down pre-pandemic. It's expected that we're going to get to a post-pandemic world. And of course, there's been technological adoption, and they have benefited from that with a big swing of sales and product purchases. However, Apple has said they expect iPhone 13 production to slow. I believe they even halted it. I haven't dove too deeply into that, but that should raise concerns. I'm surprised the stock is rallying today, given that news, but that's what happens. So just something to think about. Rates rising, possible less cyclical aspect, less environment benefit aspect may impact these stocks. Maybe we'll see a decline, maybe we'll see a pause, maybe we'll see a continued rally. We're not forecasting those stocks. We are not owners of them on this channel, the Megacap Techs. So we are sitting on the sidelines with that. We're just watching that, and we think even if something does happen there, we can push to new all-time highs and possibly beyond. We'll see. We're positioned the same way. We are adding and subtracting here and there, but generally within the same mix of stocks. I will sell out of the money options I had purchased and buy CRISPR Therapeutics with that, for example. So that's what I'm personally doing. Again, not investment advice, but these are investment views that I have. I encourage you to do your own due diligence, and you certainly are watching these videos. Thank you for watching. Please like and subscribe. Until next time, peace out. Feel free to ask questions as well. I'm happy to help.